with us, Atta. Hi, morning. Good afternoon. I don't know whether you caught the first part of my introduction. I wasn't sure whether I'm live. I'm Elaine Lockman, one of the co-founders and directors in Atta Plus. The segment of Ask Atta today is our fortnightly segment, whereby this is brought to you live on Facebook by Ada Plus. Ada Plus is a regulated equity crowdfunding platform. We are regulated by the Securities Commission of Malaysia, whereby our platform facilitates fundraising for SMEs, from the public. Yeah. And what we do is every 2 weeks we stream live this session whereby we speak about the A to Z of equity crowdfunding and all those specific topics of interest for our ecosystem specifically and generally for the public. So this today's segment, actually this week's segment, we want to talk a little bit about the budget 2021 that was tabled by the Minister of Finance, Tengku Zafrul, YB Tengku Zafrul, about a couple of weeks ago, I believe. And joining me today are my two other co-founders. We have Aimi Aizal Nasharuddin. Say hi, Aimi.
Hi.
And we have Kiri Andreo.
Hi.
Okay, and to what we say debunk budget 2021, so it was certainly an interesting budget. I guess what we call it an expansionary budget, and it's one of the biggest budgets that's been tabled in Malaysia. So before we proceed to have a discussion about it, I just want to mention this. This is a specific incentives for equity crowdfunding specifically, and this is an excerpt from the budget speech from Tengku Zafrul. So equity crowdfunding, or ECF, is one of the alternative financing methods, especially for technology startups, to encourage more individual investors to take part in financing through the ECF platform. Income tax exemption of 50% of the investment amount, or limited to 50,000 ringgit, will be given. So that's the first goodie bag that was given to the ECF sector. And the second bit of goodies that we received from the government is 30 million ringgit will also be allocated through matching grants to be invested on ECF platforms under the supervision of the SC. So there's two parts. So obviously we were hoping for more. We actually submitted a few other proposed incentives to prop up the equity crowdfunding sector. So perhaps before we proceed, I think let's take it one by one, and maybe we want to talk first about the tax exemption. And before I hand it over to the floor to Kiri and Aimi to chat about it, just to a bit more information on the tax exemption. So the first point is the tax exemption is on aggregate income equal to 50% of the amount invested, and up to a maximum of 50,000 for each year, per annum. Number one. Number two, this is for investments made from 1st of January 2021 up to 31st December 2023. And the third point is the deduction is limited to 10% of the aggregate income that is subject to meeting the relevant conditions. So comments. Aimi, Kiri?
Aimi, you want to take it first? Well, I mean, maybe I just started.
Yeah.
I think on the technical side, I would need Aimi to I think clarify some certain points. Exactly how that works. If you're a potential investor, obviously you want to know is, okay, what exactly does that mean, and how does that translate into dollars and cents for me and in incentives for me? I'm just say from the industry perspective, we have been asking for this for the last, I think, three budget session proposals. You know, we've been fighting for this as an industry to address the issue of incentivizing investors. On the other side of it, if you look at it's the companies themselves fundraising, and obviously as the asset class has become more known and trusted, there is a funding gap, obviously. So in terms of getting companies to look at equity crowdfunding as a viable platform or viable method of raising funds, we didn't see that as a major issue over the short to medium term. The main problem we saw in this particular sector was actually incentivizing investors more, and particularly the retail investor. And this is quite crucial because the whole concept of or the whole basis of the government introducing equity crowdfunding, it's not just to fund startups and promising companies of the future, but it was also to allow the participation of retail investors, which essentially means the man in the street, in allowing them access to companies that would high growth potential. Previous to that, you see, your Facebooks of the world, your Grabs and your Ubers would go to private equity companies or investors or knowledgeable certain types of investors, high net worth investors and everything else. So you, the public, only get that opportunity to invest in these companies when they go public, and by then, generally the price of the company is quite high. So so this particularly addresses that part of it, which was incentivizing and getting more mass participation into this asset class. So we saw this as a crucial step forward in the development of this sector, and obviously in the funding and growth of companies, the new companies of tomorrow that are going to be essentially creating the new jobs of the future as well. Yeah, I mean, I want to hand over to you on the technical part of what.
Yeah, before we go on, say hi, Hasni. You know, nice to see you here. Okay, Aimee, take it away. Your thoughts, and maybe a little bit more on the technicality side.
Okay. I mean, actually, on the technicality side, also, it's something that I need clarification, which I managed to seek some clarification. But basically, long and short of it, the maximum amount that you can claim for tax deductible or tax deduction is 50,000, and subject to whichever is higher, is either 10% of your taxable income or 50% of taxable income. So, which means that if you are earning, let's say your taxable income is 100,000, then maximum you can claim is up to 50%. So if your taxable income is, let's say, 200,000, I don't know, maybe a million for that matter, right? So you can still only be able to claim only 50,000 ringgit, in terms of taxable income. So that is pretty much as far as the technicality is concerned. But I guess the actual mechanics of it is yet to be known. I believe typically what happens is that after the budget has been approved, then of course LHDN will come up with detailed procedures and how to go about doing this. Just to add on, as what Kiri was saying, this is actually a very good step because over the past 5 years since we started crowdfunding, I guess the biggest challenge has always been, to incentivize the investors. First, in relation to knowledge, simply because there's not enough information out there. But the second thing is also, what's in it for them other than waiting for the next whatever years, before they can exit, right? It is unlike typically when you put money, you get an immediate dividend and so on. Of course, you see a lot of participation over the past 1 or 2 years, simply because there's a what do you call it, excitement in terms of I guess some of the investors are also passionate about the business itself, what they are getting into, and so on. But what we see in UK, for example, I just wanted to give you an example of what happened in UK. In UK in the 90s, what they have done, actually, they introduced this scheme called SEIS, which is actually, I can't remember what it is meant, but it's actually a special scheme whereby if investors invest in these enterprises, which is actually they call it small enterprises with initial funds, then the amount of investment, which is up to 30% of their disposable income, right, can be we call it you can actually get back after you have actually paid all your tax in the form of return. So what that basically means is that it's similar to what we have in Malaysia. We call it a tax rebate. So which means that if your taxable income, not taxable, your your amount of tax payable is, let's say, 50,000, you can claim up to 50% of that if you have invested that kind of amount in any of these type of enterprise. So I think that would actually even be more incentivized, I would say so. But I guess at the end of the day, what the Malaysian government has done is a very good initial step to that boost in the investment scenarios or in investment market.
Yeah, I agree. I mean, I just want to add on that it does pave the way for us to become a nation of investors, rather than just a nation of consumers. That we can see a lot more interest from people in terms of what type of companies to invest, what kind of companies to support. Trying to being investment or financial literate is also a way to progress that agenda as well, which can only be of tremendous benefit to the country moving forward. And this is, so financial literacy is very, very important. And I think now you have you have almost like some kind of a fund now, your own personal fund to start investing in companies, startups, like promising companies in the future. I think it bodes very well, and also there's a lot of I would say fun in it as well. There's a lot of benefits in it in terms of you're seeing supporting the company, seeing their progress. Of course, hopefully enjoying the fruits of your investment in the months and years to come.
Yeah, I'll say hello to Jem and Adam. Hello, thanks for joining us. Anyway, moving on. I think like Aimee and Kiri mentioned also, we've been I'm not sure whether they mentioned it, but we've been working on this proposal for the last 3 years actually. We have submitted over and over again, and we're actually very, very pleased that finally the government hear us, and we believe this is really, really important to really spur the equity crowdfunding industry, as well as like Kiri said, to get the public into the mindset of investing into I guess the next Malaysian Incredibles, and we used this tagline a few years ago. But maybe Kiri, maybe you may want to share, how has like in the UK example, right? How has it actually spurred the activities, and really because of this, it actually really accelerated the growth of the equity crowdfunding industry there.
Oh yeah, I mean, I just want to add a qualifier there. Okay, I'm British, but I've been living in Malaysia for many, many years. But I do keep an eye on, specifically with regards to crowdfunding developments in around the world, not just in UK. But yes, I mean, UK has probably been the most vibrant equity crowdfunding market in the world, and that includes the US. In fact, the US has just recently announced amendments to their regulations in order to boost equity crowdfunding there. But yeah, tremendous. I mean, I don't have the actual date numbers in front of me, Elaine, but it was tremendous. I mean, and billions have been raised in terms of pounds. We're talking about in pounds by the equity crowdfunding platforms in the UK. It like I said, I mean, and part of that, central to that, was actually the tax incentive for retail investors, for the general public to to invest in this particular asset class. So if you take that model in a similar way, potentially in Malaysia, we can. It's a tremendous. I see it as a tremendous step forward. Of course, the actual how, because I think in UK the companies the platforms themselves help assist the companies in terms of assisting their investors in terms of the claims back, that working with the tax department, Her Majesty's tax department and whatever. So I think that there's certain details that obviously we have to discuss with one is our issuer, but also with the Malaysian tax department in terms of how this will be managed and executed and everything else. But generally, it's the surge in investments in equity crowdfunding in the UK after this happened has been tremendous. It's you're talking about in the 1,000 range in terms of increased growth.
Yeah. Hi, JB.
I can find the data somewhere, but it's been that.
Yeah, JB just joined us. Hi, JB. And JB, thanks for the article. So JB sent me a article on, and I shared it with the group on crowdfunding poised to grab role as VC alternative, thanks to the recent SEC revamp, and this is what Kiri was talking about. And I think with this incentive that's given by the government through the budget 2021, we feel that it's going to be similar, trajectory to the industry in Malaysia. Your comments on that, Aimee? Yeah.
Say again. Sorry, I was lost.
Hi. So I said crowdfunding poised to grab role as VC alternative. I think this is a lot of companies right now, they're looking at crowdfunding as a key alternative, especially as a company looks at their strategy in terms of growing their value before they actually go to either pre-Series A or Series A. Yeah.
Yeah. I mean, you want to jump in a little bit there. Number one is let me just clarify that essentially the changes in the US was that previous companies can raise a maximum of $1 million, just over $1 million a year per annum. Now it's been increased to $5 million. So obviously that's widened, if you like, the types of company, widen the appeal of equity crowdfunding to different types of companies, more ones that have, if you like, progressed beyond just the requirements for seed funding and all that. Now, as for it replacing VC, I don't think so. I think what it will do is complement, and actually what it will do is VCs can actually focus a little bit more on latter stage funding and all that. So because the way they're structured for risk is a little bit different as well. So this obviously I would see complements and helps them, because a lot of the risk has been taken out in the earlier stages and whatever. Anyway, so that's essentially the changes in the US, and the 5 million is actually now that companies can raise is per annum. So that is also quite significant as well.
Yeah, I am talking about the alternative investment. That is definitely something. I mean, if you look at our first and foremost, I would like to bring into the profile of the pretty much investors that currently you see in Atta Plus. Is something that we are more familiar with. You see, initially there are quite a number of I would call it more youngsters. They come the what they call it X, not X generation, the millennial, right? The millennial.
I think we're talking about 60 to 70%. Yeah,
of the millennials. But we start to see a bit more interest of the so-called, I wouldn't call baby boomers, but very much more of the X generation that comes into our profile, and that is actually a good sign by itself to depict that it starts to bring quite a number of interest to people who has been actually traditionally invested in various form of investment, and now they are coming into what we call the new form of investment, which is equity crowdfunding. of course, there are still a lot more need to be done, and I think what the government has done to incentivize through tax is actually a good, what do you call it, a good start, for them for investors to see one of the ways for them to be able to benefit out of this sort of investment. And I think we have not talked about the other one, which is actually the what do you call it, the specific allocation for a matching investment by the government. Again, another area which we believe that we'll probably see a bit more spike, in the next coming years, in relation to investment by this category of investors.
Okay, we have a question from JB. How soon can typical investors of crowdfunding platform realize their investment? Can you see?
Yeah. I think it can be realized as soon as they want, as soon as the company wants. Okay, I think you see what happened, what we have seen, over the past month or so. I mean, those who started perhaps 3-4 years ago, we probably saw 1 or 2 exits through a direct sales. Yeah, but I believe, based again from our own experience, that we probably see some what do you call it, strategic exit strategy, which actually will happen over the next year or 2 also for some of these issuers. Yeah, and I can assure that will definitely be happening over the next year. You probably will see that, and some of these things are this exit would probably you see the good thing is that it's not just Malaysia, but also the other part of the world. I mean, there are already existing what do you call it, avenue of exiting. For example, in the US, you have the OTC. In Singapore, which recently they what do you call it? They introduced this IX exchange. Yeah, and in some of the countries as well. So there are very more avenues for companies other than direct sales or some form of restructurings that they can actually be able to exit.
Or potentially the secondary market, I guess, which is once it's available. Yeah. I mean,
that is something that I think on our side also we've been working very hard with the Securities Commission, and we hope we would be able to see something over the next year also in relation to the secondary market. Again, another form of avenue to be able to do.
Yeah, I'm hoping I'm hoping by early next year. I mean, within the first quarter, we'll be able to see our own. Yeah, you can hold me to that now.
Okay, so JB, another question. Would you recommend crowdfunding companies to give consistent dividends? Can I just say it first before you guys talk about it? I just would like to mention that majority of companies typically, right, that goes through equity crowdfunding platforms are typically startups. So most startups are not in the black. The first few years they are still in the either seed stage, trying to build foundation, trying to grow the business and getting a foothold, in the different industry sectors. So most of them is highly unlikely will be able to give out dividends, So you can add on to that. Yeah. Aimee, Kiri.
Yeah. My point of view is, as an investor, do you want dividends? I mean, is that your aim? You look at this asset class and you ask yourself, well, what's the potential of this asset class? I mean, I always advise if you want to invest in something that gives you dividends, then there are other types of asset classes that you perhaps should be looking at. But this asset class has the best potential in terms of capital appreciation. And therefore, how do you get capital appreciation? Well, obviously, in terms of adding value to the business. So how does a company add value? Well, it's obviously through reinvesting whatever money it does make, and even if it's in a fortunate position, even within a short period of time, to make some kind of operational profit, it's better. I would prefer it as an investor. The companies reinvest in those operational profits into growing their market share, growing their customer base, growing their brand, rather than giving me some kind of dividend. Because if because then you're adding value to the business, and obviously that value materializes when the company is either in a trade sale, goes for a trade sale, or when it goes for an IPO. So I think it is quite rightly as the best way to actually extract value from this asset class is how Securities Commission position this asset class, which is a patient investment. Now, obviously, we recognize that people do have, they want to have some kind of returns and all that, or some kind of shorter term kind of benefits from it and all that. And there's many ways a company can do that, without having to essentially give out dividends and all that. But and again, there are companies that do indicate some kind of dividends. We leave it up to the individual companies. This is my own perspective on it. Aimee?
Right. I guess. Sorry, because somehow my line over here, and I can't really hear what Elaine and Kiri was saying. But basically, I might repeat what you're saying. But basically, it all pretty much depends on the way I look at it. It depends on the company itself. Not every company or not every business that is listed in the ECF be able, like what I think Kiri was saying, be able to pay dividend as soon as possible. Yeah, but I also believe that there are companies, there are businesses that even in Arta Plus, which could even pay dividend. May not be immediate, but soon as within the next 6 months, less than a year. And again, it all depends very much on the kind of business. Of course, if you're talking about startup, of course there are various types of startups as well. There are startups that need to build over the next 2-3 years their brand, but the current how business moves today, maybe 3 years is a bit too long, so you need to make move even faster than too long. The pandemic, actually, if you look at how the pandemic has affected a lot of businesses today, a lot of business goes down, but also there are a lot of businesses accelerated in terms of their business performance. Yeah. So I guess it all again depends very much, and we do encourage. If you ask me, every time when there is I do ask question that is there a dividend? But again, that's not a general question. Only on very specific types of businesses, which if you go through in Arta Plus itself, you'll see the dynamics and the spread of types of businesses that we listed are not merely tech-based, are not merely what they call it, startup that has no future or very very fuzzy future in terms of return. Yeah, but some are quite straightforward. I think we have seen. I think recently, I wouldn't want to mention that you will sound biased on my side, but I've seen companies who actually perform quite well, even after 3-4 months, and technically, if you ask me, they could actually give a good return for some of the investors.
Thanks, Aimee. Hi, Anne-Marie. Yep. Thanks for joining us. Okay, another question for JB. JB's on the roll today. Okay.
Wow,
Are there any instances where it is better for companies to choose P2P lending over equity crowdfunding to raise capital? Can I answer this and you guys can add on? So for us, right, JB, there are, it really depends on one fundraising strategy and what the funds are used for. So typically, right, most companies will use P2P specifically for specific project financing or invoice financing, and more short term. Yeah, and in general, companies that go for equity crowdfunding is more to raise funds for expansion and growth. Yeah, and mainly used for working capital and marketing and business development and even tech development. Yeah. You want to add on, Aimee and Kiri, to what I've just said?
Yeah, I would go on, Amy. Go first. Go ahead.
Amy, you go first.
No, the question is, is it better for companies to choose P2P lending over? This you are referring to companies, not investor, right? Meaning that now, should I actually raise money?
Issuers, yeah.
Which is the best method to raise money?
To parrot what? Sorry.
Issuers. It's issuers.
Yeah. So sorry, the line is prepared. Anyway, yes, it depends very much. Just to parrot what Elaine was saying, it depends on why you raise the money for. Yeah, typically, if you look at P2P, right, they raise money because, number one, they need very short bridging financing for a very specific reason, for a very specific project, for a very specific concession driven type of reason. Yeah, and typically, again, for them to access, to be able to raise this sort of fund by the bank is close to either impossible, or it will probably take them a year, just to raise, and they do not have that kind of time. And I think P2P give that avenue for them to be able to raise the money faster. Of course, it's going to cost them a bit more, but as you can see, fundraising, even though it's expensive, but time is more of an essence in most of the businesses. Yeah. So again, depends very much on that. Kiri?
Yeah. No, I just wanted to add that it was. Elaine talked about the funding strategy, but I would take one step before that and think about and try to map that against their business strategy moving forward. I mean, what makes sense to their business strategy? These are all different types of funding options available to them. They have short-term, long-term implications, and there's also, in terms of the cost, there's a cost factor as well. So I think the better the company maps marries its funding strategy closely, align it to the business strategy, the better sense it makes. And especially now, in a period where things move much faster, I think becomes critical. The requirement, like Amy said, sometimes if you're trying to raise money from a bank, it can take months and months and months. And a lot of companies, especially in the areas that the kind of technology companies that we see, don't have that luxury of months and months and months. Of course, P2P is an option for them, but like I said, there are implications. There are implications of all these funding options for a company. So I think the company needs to evaluate all those things in the light of its business strategy.
Hi, I'd like to say hello to Marie. Hi, Marie. Yes, Marie, I see your question, but before we answer that question, I just want to just also highlight to the other goodies that was presented in the budget 2021, which is the 30 million matching fund, right? The investment fund. And whilst we appreciate the budget allocation by the government, so a bit sad, because I think for ECF perspective, we would have expected it to be the same amount, or if not more than what's been budgeted for P2P. Your comments, Kiri and Amy?
No, 100%. I mean, we're appreciative of the support, obviously, and again, it's the government's moved in actually quite a good way, incentivizing on the issuer side previously, and now on the investor side, and we'll see how that materializes over the coming, I think it's 36 months. Or 24, 26 months. Yeah, of course, we would like to have more, definitely. And I think more is really needed. I mean, and it comes down to, I think the recognition that startups, this part of the economy is so critical for the country moving forward. We're talking about digitization and creating the jobs of the future. This is such an important sector of the economy. So, yeah, definitely wanted more, but anyway, we live to fight another day. So the war's not over; it's just one battle.
I just want you to take a look at Marie's question. So Marie has asked,
Right.
can you please provide a basic idea on what kinds of shares or equity can be exchanged for the capital? Plain vanilla equity or preference shares? What's the difference for the investor and for the issuer?
Before I answer that, I just want to add on some of the things that you mentioned earlier about the second incentive in the budget. I think apart from good, maybe better to have a bit more, but I think it is also a good step whereby by having a matching, which means that as you can see, actually this is not new because I think the government has done this. I can't remember how much was allocated in the past. Some millions. 100 million. Previously was 100 million under the MySafe program, right?
50 million. It was over 2 years.
So really, it's an additional 80 million if you look at it in total.
All right. Okay. Cool. So what I think good about this is that the way I look at it, it allows the government itself, or in this case, SC, participate itself in shares of the company, and having that, it gives some level of scrutiny. May not be 100% scrutiny, but a level more. When you have a government, when you have agencies that actually, part of your investor, then you be more careful. You ensure certain governance are being complied, in that sense. Especially when you have, SC, Securities Commission, as one of the shareholder of your company. I mean, previously, there's a lot of questions that people ask. Okay, I put money here. Who will monitor this? No doubt. Even with the MySafe, it's not that the SC will monitor this. I'm not so sure whether the SC is one of the audience in this live Atta Plus today. But I think that would be. The way I look at it,
I see some familiar names.
Who's that? I think we saw that as a positive thing, and then I think to some extent we could even there's even instances that we say that hey, you have to do this. You know why you have an SC as your shareholders now, right? So I think it's a positive thing, it's a good thing, and that's the angle that I would like to look at, is rather than purely the amount of allocation that is made by the government.
Yeah. Can you answer Marie's question now?
Let me see. What else? Can you please provide a basic idea on what kind of shares, equity, be exchanged for capital? All right. In vanilla equity. Oh yeah. Just for information, Marie Conrad. In equity crowdfunding, we allow both plain vanilla, which is the ordinary shares, as well as preference shares. So typically, preference shares, there will be a lot of some of the conditions that will be attached to it. Of course, it will rank higher than a typical ordinary shares. At the same time, typically also it has some incentive or return given back to the shareholders on a more regular basis. Yeah. So yes, we do that. Yeah.
Thanks, Amy. Thanks, Amy, for that. Yeah. I just want.
What's the difference for the investor and for the issuer, Amy? The second part. Yes, we allow it. The second thing is what she asked is what's the differences for the investor and for the issuer.
Okay, of course. Yeah. I mean, this typically ordinary shares is ordinary shares, whereby you are the ordinary shareholder of the company. You rank last, in terms of preference, in terms of the ranking of the stakeholders of the company, and typically, whether you're going to attach any form of dividends and so on, it all goes back to the board, and it doesn't have to be there when you subscribe to it. And at the end of the day, how you actually exit, like we have already mentioned, there are various ways of exiting: direct sales, get yourself listed, secondary exchange, and so on. But for preference shares is typically a loan stock. it's typically a loan stock, but people don't call it loan stock. And if in Malaysia, in the SSM, it is still regarded as capital, it will be classified as capital in the SSM form. Again, it ranks preferably higher, normally it's slightly just lower, just below the debentures holder. So preference shares has that advantage. Second thing, there are quite a number of other elements which are attached to it. It can be convertible, it can be redeemable, it can be unredeemable, it can be, and again, it may have also dividend, or in a typical capital market definition we call coupon, which you pay either monthly, yearly, quarterly. You can specify that. So typically, an investor who want to have a more secured, I would say, position in their investment would prefer to have a preference shares. Those who want to have a better, a higher risk but a much higher return would probably go on in ordinary shares.
Yeah, I just want to add on to what I'm saying now. For companies who are looking at issuing or offering pref shares, please you have to be mindful that you must understand what you're offering, and engage with a proper lawyer. Yeah, when you design this, and you must have proper documentation. Yeah. And another thing that I want to add, under MySIF, and this is also related to Adam's question, is that you see, we have been receiving, quite a number of, quite a lot of applications, because everyone would like to, leverage on the COVID-19 incentive from the government, which is they've revised the matching ratio from 4:1 to 2:1, right? It's more aggressive, up to 1 million ringgit per company, and that incentive is due to end at the end of the year. But however, make sure that you must understand that these funds, and whatever funds that the government has put in for budgeted for this program, is all taxpayers' monies, and you must have responsibility to these funds. Yeah, and the obligation is to actually give due returns to all your investors, including to MySIF. Yeah. So to Adam's question, is there a chance that MySIF might be extended to next year? And is SC looking into this? And if so, will 1 to 2 still stand, or perhaps a change in ratio? Well, Adam, yes, MySIF is going to continue. If you see the budget allocated is 30 million for 2021, it will continue. And whatever funds that, because it is a grant from the government that is put into the fund, right? So, if there's still monies this year, the 30 million will be added on into the pool. That's number one. Number two, in terms of the whether the 1 to 2 will stand, at the moment, it is due to end 31st December. However, having said that, Madam President of the association is P2P and ECF Association. I'm looking at requesting for an extension to that, especially we are still in recovery period from the impact of COVID-19, and I will be putting in a formal request to the Securities Commission to consider extending it further. Whether there will be a change in ratio, if it ends on the 31st of December, then it will revert back to the 1 to 4 ratio, and up to 500,000 ringgit per issuer. Yeah. So I hope that answers your question. So we are in the last few minutes of the session. If there's any more questions, one last question before we close the session, and any closing thoughts from Aimee or Kiri? on the budget
No.
and in general?
No, I think I mean the budget was delivered under, I think, difficult circumstances. I can sympathise with the government in a lot of ways in terms of number one is obviously the overall political situation, but second thing is the overall economic situation, that not just Malaysia, globally, what has happened and all that. So I think it's overall it's good. It's okay. I mean, specifically for us, it's a continuation of the support that we've seen in our asset class, our sector, and we appreciate that. Obviously, of course, we would like more, and I think that's generally that's the direction we will be doing, because we know we're fighting for of the development of entrepreneurship in Malaysia.
Thanks, Aimee.
Yeah, I can't help seeing Mary asking the last question. Maybe I just answer that, because actually we did answer that just now. The question whether does the tax incentive works for the investor? The answer to me, from my perspective, is yes. And we have seen how this has been done successfully elsewhere, especially in the UK, when they start to introduce, the tax rebate. I mean, in Malaysia we call it tax rebate. Over there they call it a return of the tax return. Yeah. So that has actually helped a lot. So other than that,
Yeah.
yes, please, yeah.
No, your comments on the budget.
Well,
Oh, my comment about that. All right, sorry, because the line somehow I can't hear. Okay, so overall, probably this is the first budget that I have to read more than 100 of pages in Bahasa Melayu, which it took me a while to actually grab everything else. So I was trying. Yeah. So anyway, and
we lost him.
We've lost him. Aimee, come back. Anyway, okay. The other thing is, Marie, just to add on to Aimee's response on the tax. Shaz, can you bring Aimee back? Anyway, on the tax incentive, is that at the moment we are waiting for the SC and also to actually revert back to us on the briefing on how it works, and so just be patient, and I believe that we will only know on how the mechanics of it only most likely early next year. Yeah, and it's only applicable, I'll just repeat, is applicable to investors who invest in equity crowdfunding campaigns from 1st January 2021 to end of 2023, 31st December 2023. Yeah, and I'll just hang on, let me pull it up. I just repeat again. So basically, the tax exemption is on aggregate income equal to 50% of amount invested, up to a maximum of 50,000 for each year. Yeah, that's number one. Number two, the deduction is limited to 10% of aggregate income, which is subject to meeting the relevant conditions. So what these conditions are, I think we'll have to wait for a little bit more clarity from SC and also from Inland Revenue. Okay, I think with that, I don't think Aimee is coming back, unfortunately. Anyway, thanks everyone for joining us today. Kiri, any last words?
Not really. No, just want to thank everybody for taking the time out to listen to us. I hope we do hope you, as always, you get some benefit out of these shows that we're doing.
Yeah.
And we will continue to do them every 2 weeks. And thank you for your support. Support. And, I think the challenge actually now, Elaine, the challenge is now between us and SC is to communicate the tax incentive, to let people know about this, So that's something that maybe you, Madam President, we need to discuss with SC.
No, we're waiting for them already. They already told us that we'll have to wait for them because they can't be contacting us until they they let us know.
But it has to be a integrated communication strategy. In terms of letting people know how this works and what the benefits are to them.
Of course. Okay, and guys, thank you so much for joining us. Thank you, everybody, Adam, Marie, JB, Hasni, Ramiza, who else? And everybody else, everyone else who is viewing this. And we'll see you again in another 2 weeks. Yeah, we've gone over time. It is an interesting topic. We can go on and on about it, but anyhow, time is limited. So we'll see you again in 2 weeks.
Yeah,
sorry.
I think. Sorry, Elaine. I think then for the next we could do another session on the budget. I think maybe we did talk about you getting Zaf, the finance minister, in maybe for the.
I don't know. I don't know whether you can get Zaf. Anyway, thanks, Amy. Thank you. Yes, Amy, I owe you something. I haven't forgotten. Anyway, okay, guys. Thanks again. Have a good day. Please take care and stay safe. Yeah. Bye.
Bye-bye.
Bye.